Good morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a great Wednesday. Welcome back to Fundamental Wednesday. It is the day that we take a look at what the markets are doing, update you guys from Monday, and our ticker of the week was flying high, and now it's kind of doing a reverse back turn because of how the market is kind of selling off a little bit. And, we have been kind of positioning ourselves for this. We did hit the target. If you look at the extended hours here, Fubo actually got to our target, hit it right on the nail, and then came right back down. We're kind of happy with the fact that, this kind of is performing to the way that we want it. This stock does have a pretty big short float, and so it could be squeezed to the upside. So that we will be watching this continually to make sure. And to make just kind of see if it can hit this previous highs of this $40-something. And so we will be watching this very closely today. Market's selling off a little bit, so let's kind of do a pre-market rundown here. Welcome in, guys. Hope you guys are having a great day. Good morning. How are y'all? What's up, Susie? How you doing? All 36 of ya. Welcome, welcome, welcome. Are you guys ready for this pre-market rundown? What's up, Johnny? What's up, Andrew? Welcome, welcome back. How are you guys doing? Okay, so obviously the talk of the town this morning is Gamestop, right? Gamestop is the main talk of the town today. I think Wall Street bets are pretty happy with the fact that Melvin and Citron got, squeezed here. They're pretty much, I think, taking a bask in the brilliance. But the funny thing is that I don't think Wall Street bets understands what they're doing here. And the gravity of the situation is, at the end of the day, they think that they're banding an army together to kind of fight against hedge funds. But let me try to break this down because I've received too many messages about this from you guys asking me what the squeeze on GameStop is about. Okay, so let me explain this once and for all so that people can understand what is going on. Okay, so this stock, GameStop, this stock, okay, it has been a company that has been around for a while, and recently was initiated with a short position from two specific, hedge fund, mutual funds, whatever you want to call it, right? Citron Research, and then also Melvin whatever funds, right? And, they put out a report saying, this stock is going to probably go to zero, and, this stock is not going to be around for a long time, and blah, 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 blah. Now, a army of traders known as the Wall Street Bets, which are retail traders, they took it upon themselves to save this company and say, we're going to keep buying the stock while these guys are short. Okay, they had a pretty big short float on this. Okay, this stock was shorted heavily, and so then a bunch of people piled into the shorts. Okay, sending this stock into a kind of a overfloated short position. So instead of there being 100% of the shares being just shorted, people were taking leverage to short these shares. And at some point, the total number of short shares were 139%. Okay, which represented a 40% leverage taken to short these shares. Okay, so what happens when a bunch of retail traders can come in and buy up the stock? The price starts to go up, right? And then the people who are holding these short positions, they start to feel the pain, right? Okay, so there are equal sides on both sides. Now, what people fail to understand is that retail traders can't alone manipulate a market cap like this. Okay, so the market cap of this company is 10 billion. All right, and if you were to put together all the money in Wall Street Bets, let's say there were 2 million people there, or even more, and each one of those 2 million people invested 1 million, right? You would still have, okay, that would be like 20 billion or like something crazy like that, right? But, if each one of them invested, 2 million people invested, about $10,000, you can see where I'm going with this. It's not enough to move the stock this violently, okay? What has actually happened is the people who have been holding this stock and pushing the price up, they have been buying it at such an alarming rate that the options and the short positions that Melvin and Citron and a bunch of other people were shorting were suffering losses, right? And so what happens? They start closing out those short positions. And when you close out the short positions, what happens is that the opposite of a short is a buy. So in order to close out a short position, you have to go long, all right? So you buy the shares back, and when you buy the shares back, this sends the price higher. And this creates a ripple effect. Once one person starts doing this, everybody starts doing it, okay? And then finally, the stock goes rocketing, okay, which is what has happened for the past, the first wave, and then now you see the second wave, and now you're seeing a third wave up, right? And you can look at the extended hours here. You can see what has been going on, okay? You can see massive, massive squeezing here. This is what we call a short squeeze. This was a short squeeze, not done by an institution yet, but it was orchestrated by a bunch of retail traders, right? You can think it's like it could be like a kind of a squeeze for people who are willing to just put their money out there, okay? Now, this is a complete degenerate move. Let me explain to you why. Because these people who have bought this stock, they obviously don't think that GameStop is worth $160, right? They're just floating these stocks. What's interesting here is people are willing to buy the stocks, and they say that they are banding together to save this company. They're actually not. What they're actually doing is sending this stock higher, and at some point, somebody's going to get caught holding the bag. Do you understand this? So when so many people buy this up at such an alarming rate, what happens is that the underlying asset and the options, they experience insane volatility. That's the reason why you see the IVs of these contracts are ridiculous at almost 400 to 600%. Okay? You will probably never see such high IVs again. It is quite ridiculous, all right? And so the people who say that they're banding together to save this company are actually just a bunch of people who are fueling this rally. And the first person who takes the money out of the bag walks away with profit. The people who hold on and buy more, they kind of just are like caught holding the bag, okay? At some point, there will be a bunch of people who will be caught holding the bag. And let me tell you that right now, hedge funds and mutual funds are looking at this and going, tasty, tasty, tasty. Why? Because they themselves are selling you calls up here. They want you to buy those expensive calls. And that would be immensely valuable, because if you sell these calls, or even if you sell a call spread up here, which people are willing to overpay 600 times for, you would make an immense amount of money on this, okay? Therefore, this entire thing that is orchestrated by Wall Street's bets, it's quite a ridiculous thing that happened, because they're not actually banding together. This is just a game of who's going to sell first. At the end of the day, the price goes up and up and up, and who is actually going to hold the stock to oblivion? Do you really think this stock is worth $360? No, the stock is not worth $360, right? So what's going on over here is pure speculation on what the price is going to be tomorrow. And we don't play these kinds of games. If you're a retail trader and you're doing this, you might as well take your money and go to the casino. You will get much better odds. I guarantee you, you will get much better odds. This is the reason why I wouldn't play this stock. I just don't want to touch it. I would rather watch it from far and laugh at these people, because they're just playing a game of Bitcoin. That's what they're playing. Okay? But except Bitcoin has like more users than this thing does. All right? The only difference is Bitcoin, the only similarity between this and Bitcoin is they're both being speculated on, right? And the only difference between them is that this company actually has a value. Bitcoin doesn't. And that value of this company is somewhere between 0 and $20 or $30, right? Everything else is what people are willing to pay is called a risk premium. And that risk premium that they're willing to pay is too super high right now. Okay? So you should be running far away from this investment, because it's not something that you want to buy and hold. All right? All right, I'm glad I got that out of the way. Make sure that you're being responsible, guys. Don't put yourself in situations where, you feel the FOMO Momo Jumbo, you see the stock going up 100%, you're like, yeah, I want to jump in there and make some quick money. It doesn't make sense. All right. You want to make money on this? There's a right way and there's a wrong way. The right way to make money on this is sell credit calls. All right. You sell credit calls. You sell a call spread. You know, you do something covered so that you can easily get a credit for holding some sold calls. And most if you're if you do a credit spread, you won't be assigned those calls. You don't run the risk. Okay. You have the bought call and the sold call. You're getting a credit. You're just taking what's in between over here, right? For somebody who's willing to overpay for these contracts. All right. And the other way is to outright sell calls. Okay. But I don't recommend that. It's pretty dangerous because the losses could be unlimited if the stock chooses to rally all the way to $400. And if you choose to do that, make sure that you go far expiry. Make sure 1 month out at least. If you're selling options and you have a 600% IV, make sure you give yourself enough time value for this IV to drain. So do not be taking weekly sold naked calls. I repeat, that is an easy way to destroy your portfolio and get yourself into some really troubling situations. Okay? But anyway, even if you do sell, let's say you do sell calls here, what is the most that will happen? You'll be assigned 100 shares short at the strike that you sell, for example. And being short GameStop at $280 is not that bad of a situation. You just gotta remember not to panic, that's all, okay? So, all in all, I'd say, if you don't want to, wake up feeling jittery and feel like you've drank 6 cups of coffee and feel like, your heart's about to explode, stay away from this thing. There's so many other tickers to play. All right, great. I answered that once and for all. So I really hope that we don't get like a lot more of these requests because I got a lot of messages regarding this and I want to make sure that we cover that. All right, cool. All right, good morning. What's up? Good morning. One question. Can I ask you guys a favor? Would you guys be able to go to my previous video and go drop a comment on it? If I put a link to it into the chat, you honestly just need to drop a emoji in it. I just want to see how it makes a difference to the analytics that YouTube gives me. That's the link right there in the chat. If you can just all go there and then leave a like and make sure that you just leave a comment, I would truly appreciate it. That would be awesome. Leave an emoji, leave maybe some words. I don't know. Just say something that you want to say. I guess I don't honestly mind if you want to give me positive criticism. That's fine too. I take criticism and I use it to improve my stream. So I would love that. Thank you very much for that. If you can do that, I really truly appreciate you. Okay, now. Now there are a bunch of other stocks also that are squeezing, and so AMC is one of them, right? AMC is another one. This stock is up 200% now. It's interesting for sure. This is another one they want to save. Apparently, they want to save this stock as well. So Wall Street Bets is taking it upon themselves to say, "Oh, we want to save all these companies," but at the end of the day, I just. Yeah, you need to understand, like this one has a 36% short float, right? And so it's being squeezed as well. Once again, it's like $15 already. I personally do not like to touch these. All right, I do not. Short squeezes, not my cup of tea. Yep, you can think of it as a quick and easy way to gain some money, but I don't like them. So be careful. All right, be careful. Okay, now. So if you're here, make sure you click the subscribe button, click like, and then I posted a link into the chat. If you can go to that link and just drop a emoji or a comment, I would truly, truly appreciate it. Okay. Okay, so I still see some questions about GameStop, so I'm going to address them right now. Okay, one question at the beginning: what causes his massive pre-market movements at GameStop? Okay, so the pre-market movements you see on GameStop are literally people who have access to after hours, possibly institutional traders, who are basically, buying the stock up and selling them and hoping to trap a bunch of retail traders who are long from the previous day. All right, so maybe there's a bunch of people who are long from the previous day, and they get shorted and then they get long again, and so there's a whole pre-market action going on over here that are not accessible to the majority of people. All right, and then of course some people in Robinhood can also put in limit orders and get executed pre-market. The Robinhood allows you to do pre-market buying. Okay, why the market sells off pre-market after hours yesterday was looking good. Santosh, in order to get the answer to that question, you have to be attending this live stream for the past 2 weeks. We've been talking about this nonstop about why the market should sell off, and so now it is selling off. But then I don't know if this is a true sell-off yet, and I think this is a preliminary sell-off, and we're going to see more of a sell-off coming soon. All right, I'm positioned for it very well. Me and my team, we have been taking hedges with QQQ, TLT, UVXY. We are well positioned for a short over here. Okay, so if you are not part of the Discord community and you don't know what we've been up to, I do these weekly webinars where we talk about what the position is for the coming week, and we react according to it. We anticipate what the market's about to do, and then we play it out. So far, this past 2 weeks, 3 weeks since we started the Discord community, we have about 70 plus members right now. It's been a really great journey for us. Initially the first, I think 1 or 2 weeks we had a little bit of a hiccup, but right now the portfolio, the 10K portfolio, is looking really great. We're up $1,600 year to date. So we're up about 16% in this month alone. Okay. And so you could easily watch the entire portfolio play by play. This is all real-time data. You see me trading on a daily basis, follow the plays exactly as they come out if you were part of the Discord community. All right. And that's one of the benefits that you get for being a part of the EJ tribe. You get to see me trade every day live. And I give you the play-by-play, I give you the explanations, I give you everything, as it's happening. So that's one of the benefits. Okay, guys, last week T said Apple 129 casually. You should have hit the like button. It did really hit there. Yeah, Apple's at 143, and this forecast on Apple has been spot on. Look at this. Remember, I don't change any of these things. All right, so this has been beautiful. This was our projection on Apple. It was beautiful. It has literally, not exactly followed it, but we're pretty much followed it, right? I mean, we're there at this point, right? We took like a couple of steps. Not exactly, but you know what? It was pretty close, right? Pretty close, I want to say. Sometimes, these things that you draw out, it is what it is, right? I didn't do this as a forecasting tool. This is not an Elliott wave, by the way. This is just a regular, I'm just using it as to forecast the waves, nothing else, all right? Thoughts on GME $400 call, 129. If you want to go full degen, go ahead, man. Go ahead. You want to lose all your money? Sure. Go donate it. Absolutely do it, man. I guarantee you that's the best play you can do if you want to lose all your money. Absolutely, dude. Gamma Squeeze had a part to play as well. Yes, it did. Exactly. Yes. Gamma Squeeze as well. Yes. Too many people rushing Delta. You get a high Gamma. Everybody rushing out. This is what you see. Okay, and then also everybody rushing Delta, you get a high Gamma. This is what you see for the options price, and the options price also spikes. That's why you see the Delta of those contracts, and you see the Gamma of those contracts going ridiculous, and you see also the IVs of those contracts going ridiculous. PLTR Cohen shares must be worth $1 billion right now. PLTR analysis. Okay, PLTR. I bought 3 shares back in April, 476 of GM, still holding. Damn, son. You should probably cash those out right now. You got like, wow. Why would you buy puts on GameStop? Okay, so people are asking, would you buy puts on GameStop? Okay, so somebody explain to me why I wouldn't buy puts on GameStop. The answer is pretty simple. If the IVs for calls are high, look at the IVs for puts. Look at the IVs for calls, and then look at the IVs for puts. The IVs for puts are insane. All right, they're insane. 700 to 800% over here. All right, selling an in the money put over here would net you some ridiculous amount of money, and honestly, it's obviously not worth it to sell the put up there, right? Selling these puts, the in the money puts up here, are like basically asking for a death wish because you would be assigned 100 shares long at that strike price. But the premium that you would sell on them would probably make it a little worthwhile. For example, let's say you sell a $200 put, right? Well, yeah, you get assigned at $200, but you receive $94.90 in premium. So your cost basis per share is actually 200 minus 95 roughly, right? So your cost basis is actually 105. You're getting the shares at 105, okay? When you sell the 200 put, you're getting the shares at 105. That's the idea here, okay? So selling these puts sometimes with such high IVs would give you a position where you are owning the shares at down here. But then that's if you, obviously if you take a weekly contract, that makes sense, right? This is the 5th February's. Look at the weekly ones. Let's say you sell the 200 put here. Now it changes, right? You would receive less premium for this. Look at the IVs on this ones. They're at 900%, right? You sell these puts, you get $76.50. So $200 minus $76.50. Let's say 76, right? What is that? 124. That's what you would be getting the shares at roughly. 123.50, right? And so you would be getting your shares at 120 something 50 right here. That's where you would get your shares if you assign this by this Friday, which you would be, okay? So that's why people would sell puts. But do you want to buy puts? Absolutely not. Look at the price of the puts. They're ridiculous, right? It's crazy. Who the heck would buy these puts? They're way overpriced, okay? It's like you're buying a Ferrari, right? Why would you want to buy a Ferrari when you can, buy something equally as efficient? Okay. Should I exercise my AMC $3.50 calls 122? I don't know. That depends on you. If I were you, I would hold the option though. You have such a long expiry that will probably gain a lot more value if the shares stay up there. I wouldn't exercise for shares. Like I don't think you should do that. No. Yes, Andrew, you should. I mean, if you want, you could, but honestly, I don't think you should. Wondering if getting shares and selling calls is better comparing to selling the contract with high IB. You could do that if you wanted, Andrew, but personally, I would hold the option and then just bank the option, sell the option away. And then you can also turn around and flip and sell calls, or you could sell a debit spread, or you could do something like that. What would be an example of a spread that you would use for GameStop? You could do a call spread. So you sell some calls on the top here. I would have to work it out. I haven't really looked at it, to be honest, and I can't really make a decision because I don't have any of the information here. So yeah, that would have to be decided during market hours, Alan. The thing that scares me is the most I've seen a bunch of bubble stocks, not just CME. There's also AMC, BB. Yep, that's exactly what I'm scared of as well, Mark. That just shows you how speculative this market is in terms of taking risk and is greedy, right? And when others are greedy, you be fearful. And when others are fearful, you be greedy, in the words of our favorite Papa Buffett, right? So if you know people are being greedy, you should realize what's going on, right? You should realize. Okay, enough of GameStop, guys. I think we've talked about this for at length now. I think you guys understand where my position is. You guys understand what's going on. And so I don't think we need to talk about this much more. Okay. Is BA still looking okay? Yeah, BA is looking great. I mean, you wouldn't be bothered by BA because we have spreads on BA, right? We're theta hedged against our Boeing position. I'm not even worried. Lockheed Martin and Boeing, both of those contracts that we have are good for long term. Don't forget that we have June expiries, guys. We're chilling with those. Even if Lockheed Martin drops a little bit more, I'm okay with it. I'll just add more positions down there, and then when this rebounds, it's going to rebound hard. And then at that point in time, by June, we have 5 months to go. FYI, takes 1 month for a stock to turn around. We'll be fine. And the same goes for Boeing. Okay. Boeing. Your targets have been spot on. Thank you, Jacob. Yeah, lately we've been doing good, but remember, there's no room to be complacent here. I mean, yeah, we have been getting doing pretty good. But remember that even I will run into a brick wall sometimes. But when that happens, I always recalibrate. I take a break. I try to re-energize and see what's going on. Okay, so let's go through this pre-market here. GameStop skeptics, Citron and Melvin succumbed to epic short squeeze. They sold their positions. They're out. Michael Burry calls GameStop rally unnatural and insane. I agree with him. Michael Burry, you are right. This is the same guy who called the Big Short. GameStop does your service makes Japan peers seem a bargain. That's actually a funny headline. U.S. futures slump in risk-off mood. Dollar rises. I wonder who's been talking about this. I wonder who's been talking about risk-off. I wonder. Right? We can see yields dropping a little bit. Yeah? You know? We're seeing things turn into the way that we've been calling it. Huh? Who of y'all have been following this live stream? For a while, I've been talking about the yields climbing, and then now the yields are dropping, right? Which is good. People are starting to buy bonds, right? What does that mean? People are starting to get TLT. People are starting to get into all these risk-off positions, all right? And we have been positioning for it for how long now? 2 weeks. We've been positioning it for it all way beyond and ahead of everyone. Why? Because we see this coming from a distance. That's why you attend this live stream, right? You attend this live stream because you want to know the things before they happen. You don't want to know the things when they happen and try to chase it. That's what other groups are doing, right? Oh, be a part of my community because I'll tell you when to take something when it happens. And then the moment it switches, they tell you, oh, no, wait, now it's invalidated. Oh, yeah, you know, sorry, you know, this line that I drew here, it actually was like this. It wasn't like this, you know. I'm sorry, but this was the candlestick. Oh, no, it's actually like this. Come on, bruh. Come on, shit. These guys be crazy out here. They're thinking like, you know, oh, we're just going to draw a couple of lines and do some technical analysis on this market. Dude, come on. It ain't the way, and you guys know it. You need to look at the macro approach. You need to look at what the heck is going on with the fundamental reasoning of what things are happening. Why are things happening, all right? You can't just say, oh, okay, I'm going to just draw this line here, and it's going to trade between these 2 points. Because I'm so pro, and all I'm going to do is I'm going to drop a fib. And yeah, that's my target, guys. Oh, wait, hold on. No, wait. I need to put a target, and then I need to put an arrow, because the arrows will help me. The arrows will help me for sure. And also, I need to put a magnet. That's another thing I need to put. Magnets surely work, all right? These 3 things, once I have them on my chart, yeah, we good. We good. All right. These kinds of things, I find them distasteful. All right. People who manipulate you that way, stay far away from them, guys. I'm telling you, stay far away from them. They don't know nothing about the market. They're just speculating and as good as walking to the casino. Yeah, they might know risk management and be profitable somehow, but oh boy, they be crazy. Now, what's important is TB hating. Hey, I'm not hating, okay? I'm just saying this is real things that happen, guys. Haven't you been on TikTok lately, Alec? Have you seen these people who are on TikTok lately? Look at, like, Harshita said it, right? Look, on TikTok, they do this kind of things. You need to understand that. It's crazy. Like, you know, they go and they post these charts and they talk about how it's just all about these, technical analysis. But remember, even behind our specific analysis on Fubo, guys, tell me one thing, right? You're part of the live stream. You see me talk about this stuff all the time, right? But what was our main reasoning for Fubo here, right? Was our main reasoning this triangular breakout? No. Was our main reason this triangular breakout? No, it wasn't. Our main reason for investing in Fubo was, what was it? Or the main reason why Fubo became something that we're looking at. It was because of a 65% short float, right? And this company, as I'm about to show you, is overvalued. Okay? It's overvalued, which I'm about to show you right now, right? So, our main thesis behind getting into this trade is not because of a bull flag breakout or a pendant breakout or some kind of a crazy manipulation. We're looking at this from a fundamental reason. Number one, there are more people short on this market than there are people long. Okay? More people are short than long. That is a basis for the stock to get squeezed. All right? That's number one. Number two, the stock is undervalued, but people are overly exuberant about other kinds of stocks, therefore playing this into a sympathy play. Okay? So, in a matter of fact, many people think that we're doing a technical kind of a breakdown, but all it is over here is putting 2 and 2 together in terms of fundamentals. All right? Now, on Bloomberg here, we don't really have much else talking about. China's insatiable corn demand, blah, blah, blah. Japan, da, 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 okay. Nothing here. Okay. Bill Gates outlines strategy to prevent the next pandemic. Interesting. Man, I really like Bill Gates as a person, to be honest. He's so wholesome. The guy's awesome, honestly. Okay. Stock futures decline with tech earnings in focus. Guys, we have talked about this at length. I think you guys know what our our position has been with the market. I'm expecting worse than expected earnings, not for big tech, but I'm expecting worse than expected earnings for the market on the whole for the S&P 500. All right. So this rally, even though it might be temporary, remember that the market can come down and come into a corrective phase as easily as it's up there. Okay. And I want to point out something that the 150 moving average has been a very solid support here. All right, has been a very solid support, and this is quite a big drop. It's quite a big drop. All right. Now I really hope that for the betterment of everybody who's holding long positions, I hope we don't drop that big. But I'm just gonna say that it is very possible. All right, it's very possible. And remember, we take the elevator up, but we take the staircase up, but we take the elevator down. All right. So when we drop hard and we drop fast. So I would recommend, I have been talking about this for the previous 2 live streams already since Monday, and I've been saying this from the past 2 weeks ago, that you should be hedging up here. Okay, so if you haven't hedged, I don't know what else to tell you. All right, I don't know what else to tell you. We have already started hedging. All right, if you're interested to know what we're hedging with, I share that on a daily basis with my entire portfolio with the team. All right, and we take these plays in and out. If you're interested in joining the team, the link to join the team is pinned in the chat box. Go click on the website, sign up, and be a part of our Discord community. If you want to learn things from an educational perspective on a daily basis, that's what we do in the Discord. All right, we don't do call outs. We teach you how to trade. All right, we literally go through it step by step. We put out a list every day. We put out updates. We talk about things in a very organized manner, and we have a live broadcast channel which I use to broadcast the live stream every single day. We do a live trading session every single time. All right, so that's just a little plug that I'm putting out there. Now, Ant Financial also says they're gonna do a major revamp in response to the Chinese pressure. And then Blackstone earnings rise with market. They obviously made a whole bunch of money. Fed likely to keep interest rates near zero. Remember that today. We have the Fed who are going to be, I think, issuing a rate increase or decrease, but obviously it's going to be a hold, right, on the rates. The Fed has been very communicative about that. This Fed has been very, very communicative with the market in general, and I don't expect any surprises there. Core durable goods orders a little better than expected, and apart from that, we don't have much else here. AMC is up 295%. Congratulations if you degened into that stock. Express is the next one also. This is like a clothing company, right, I believe. And GameStop up 65% at $235. So these are literally, look at how many meme stocks are there. It's crazy, all right? So that's kind of your pre-market update. And then remember that, while retail traders are chasing all this bullcrap, institutions here are starting to pivot themselves into other positions, right? And they have been pivoting themselves in other positions. This was institutions pivoting themselves the first time, and then this was a bunch of buy orders that got executed, and then the market being pushed up again. And this might be the second pivot down to kind of clear up a second rug pull here of limit orders that are sitting right here. You remember that many people have stop losses, right? They have stop losses here. And so if, something comes down really quickly and hits all these stop orders, they want to clear out all those stops before ultimately pushing it down, all right? And so this is what's exactly going on over here. You have the first attempt by institutions. I sense a second attempt coming. So, but obviously we won't have this next wave down until we have a wave up, right? So we should see this is your impulsive wave. We should see a corrective wave and then another impulsive wave. Usually comes in waves of 2, right? And we'll see if we can hold above this level. That'll be the key level here, right? So on a 1 hour chart, we'll need to see if we can hold above this key level here, okay? The 150 moving average will be the key level, all right? No hocus pocus. Literally just using moving averages, okay? I'm not plotting anything crazy over here, all right? So you can read this article here if you want to find out more about what happened. And yeah, that should give you a good explanation. Okay, talking about Fubo. Okay, I went through this, and then putting the earnings, the treasury in view again. I just want to put this out there, that treasury yields are dropping once again, which is a good sign of the market rotating into risk off. So just putting it out there that today, as of yesterday, again, treasury yields fell about 5 basis points. Okay, 1% is 1 basis point. This is about 5 basis points. Let's just say 100 basis points make up 1%. All right. So this dropped about 0.05, so that's 5 basis points. The yields are down about 5 basis points. Means bond appetite is coming back. Okay, bond appetite, bond appetit. I'm gonna use that one. Bond appetit. I don't know why I found that funny. Okay, I'm just gonna stop laughing. I really don't know why I found that funny. That was funny. Okay, so bon appetit is coming back. We'll see if we can continue with the bon appetit. And that will be really excellent if we can continue with that rotation into risk off. Now, client positioning here from IG Market. 32% of traders are net long, with the ratio of traders short to long at 1.6 to 1. So there are more, obviously there are more shorts than there are longs. But then 32% of traders are long. So, the ratio is like 1:3. Sorry, 2/3 of traders are literally short right now. Now this usually actually sets up a precedent for a long squeeze, where, a short squeeze where market goes higher. But you know what? I think it might be time that the market comes down. So we'll see how it's positioned here. In terms of insider trading here, Morgan Stanley and CrowdStrike director sold some of his shares. This was an interesting one. Morgan Stanley CFO, chairman, and head of wealth management sold some shares. These were also interesting. What else? Whoever this guy is, chief medical officer of Moderna, sold all his shares, but they weren't a lot. So you know what? It's all right. 715,000 only. It is what it is. And what else? Apart from that, Walt Disney, CrowdStrike, yeah, okay. This one also, right? CrowdStrike, interesting. Yeah. So okay, not that crazy stuff. All right, cool. Let's do Fubo now. Intrinsic valuation of Fubo. Okay, so this stock was being short squeezed. It's up pre-market, and we'll see if we can continue to get squeezed over here. As the market's going down, chances are shorts may start to, see if they will get another leg down. This wave down looks nasty, but let's see if it will hold. The last time this happened, it was a bunch of limit orders that got nicely captured here, and some longs that got triggered, sending this far up again. We'll see if the same thing happens here. I don't think there will be. We did come pretty far down without having any limit orders being executed here. So we may see another wave down here. I'm inclined to believe that we will see another wave down, but we'll see what happens. Okay, we cannot predict the market. We don't predict the market. It's stupid to predict the market. What we do is we realize when the market is overbought and we take positions against it, right? S&P 500 was way above the 50 moving average, right? On the 1 hour chart, right? It was way above the 50 moving average, and therefore we enabled hedges, right? And it was not able to break out here, right? And then at the same time, if you look at the weekly chart, you can see how far above the moving averages we are, right? It could keep going higher, yeah, absolutely. But on the daily chart, this begs for a corrective wave, right? This begs for a corrective wave. This has been a wave up, wave down, wave up. We need that wave down in order to continue the run up for the rest of the year, okay? And I think that this wave down will follow with a sideways movement, all right? It will follow with a sideways movement. I've mentioned this many times before, that the next time the market drops, it's not going to just go back to all-time high so quickly, all right? Because I think that people will be anticipating that vaccine rollouts are going to take longer to come than they are. So remember what I'm saying now, because this will all play out within the month of February, all right? We've been talking about this, and it's all going to be a part of my report, okay? Excellent. So with Fubo here, we had that 65% short squeeze. Yesterday was a prime time to buy it. Now, why didn't I take this trade yesterday personally? The reason is because the IVs on these contracts were way too high, okay? They were way too high. Even wanting to trade calls on this, the IVs were at 200%. Even taking a ridiculous out the money contract was expensive, and I didn't want to play such high IVs on these contracts. I could have taken a debit spread, but the point is, I don't like to mess with things like that. And I'm running a $10,000 portfolio, not a $1 million portfolio, so I don't have a lot of buying power to mess around and take these kind of YOLO degen plays. Yeah, we do the YOLO degen plays from time to time. Like yesterday, we caught a Beyond short right at the market open that paid like $600, $700. It was like a 15-minute play. Literally caught the huge breakout on Beyond there, right? That was sorry, not a huge breakout, but Beyond was up 30 or 40% yesterday in the morning at $220, and I took some $190 puts and rolled this thing down in the morning. I think I exited somewhere at 195 or 196, somewhere there. And, it moved to 186 by the end of the day, but I wasn't going to try and chase this small amount. I already gained majority of the money here. It was a quick $600 to $700 of profit yesterday within minutes, okay? Within minutes. And so, I think there were people in the Discord community that took some along with me. I'm not sure if everybody did, but it was a great one, okay? So we do take these scalps from time to time, depending on the situation. If I know the stock is not worth $200, of course I'm going to do it. So the question becomes, how much is Fubo actually worth, right? Now, this is an interesting situation. You can't actually value this business using DCF. This business can't be valued using a discounted cash flow method because the business is not turning profit, okay? Operational cash flows are not positive. Therefore, you can't really use cash flows to generate a value from this business. I had to use a completely different method for this valuation, using earning power value. So using earning power value here, the intrinsic valuation of this stock comes up, even taking into account the future growth, okay? I'm taking into account future growth. There comes this valuation comes with three parts. There's a low assumption, a medium assumption, and a high assumption, all right? And the fair valuation comes to about $38.54 here. So let me actually put this in here. $38.54. This is the intrinsic valuation for the stock. Okay. And I will leave this right here as usual. Make it a little smaller maybe. It's a bit too big. And we'll kind of just like pin this one here. Lock this right there. And lock this right there. Okay, cool. So this stock is actually trading overvalued, right? It's way above its fair valuation. Now, obviously, it can keep going because it's currently being short squeezed, okay? But eventually, what's going to happen is even this, after it gets squeezed, will come back down to earth, right? So this is our fair valuation of the stock. It's at $38, even taking into account the future earnings power. So how do we come up with this valuation? Okay, this valuation is done based on past cash flow and the earnings power of this stock. Revenues were non-existent and then started to climb, and now it's at 111 million, right? We're taking all of their metrics into account: the net interest expense, the EBIT, which is their earnings before interest taxes, and then the adjusted EBITDA comes right after that, taking into account depreciation, non-recurring items, right? We net out depreciation and amortization, giving us a adjusted earnings before interest and taxes, which is then taken as a function of revenue, which is minus 145%. So they're still in a loss, okay? This company is still in a loss. It's a growth company, so, you know, it probably will be that situation for a while. Now, cash and cash equivalents and everything on the equity waterfall here. So we're looking at, you know, essentially everything on their enterprise value that makes up enterprise value. And, you know, we can see that this stock is on the high side is worth about 152 bucks. On the mid side is worth 38 bucks, which is where our valuation lies. And, you know, on the low side, the stock is worth nothing, right? Because it's turning loss, right? The market assumption here as a benchmark is 43.92, which is where the price is trading right now. Okay, this is where the price is trading right now. And where these all come from, the calculations for these are all pulled from the growth adjustments that I made. So thinking of a 15% growth, a 20% growth, and a 25% growth of operating expenses, and the OPEX percent of revenue wise, okay, and then taking the high growth to be 1,000%, the median growth to be 32%, and the low growth to be 45% here, okay, this gives roughly this value, all right? The normalized tax rate 15% seems about fair. And here is CapEx. We expect CapEx to be, you know, similar, if not higher. And adjusted earnings stay the same. The fair value, therefore, with the cost of capital of between 8.5 to 10.5%, gives us the fair value of the shares at 38.54. Okay, so this is a non-traditional way to do your evaluation. This is what we call the earnings power value. All right, because we can't use discounted cash flow here. Let me show you what happens if you use a DCF here. Okay. If you use a DCF on this stock, a 5-year DCF, this is what happens. If it loads. Let's see if it loads. All right, here we go. So if you use a DCF on this stock, this is what you'll get. You'll get $325 for this stock, okay? But you take into account an insane growth rate, because this is not realistic for the next 5 years, right? Even if you take this conservatively, yeah, okay, maybe their growth rate goes up this much next year, and then 82% the following year, and let's say we are assuming that they kind of double almost every year. And then 2024, they don't double anymore, right? This is probably not a proper assumption. So we need to actually adjust this down. And when I try to do that, these numbers are just not going to add up because of the fact that the company is in a negative cash flow. Okay, so you can't use DCF on here. It skews the values too hard. Everybody understand everybody get what I'm trying to say over here? Does everybody kind of get where I'm going with this? Because the company is turning negative cash flows, you can't use free cash flows. You can't use operating cash flows. You can't use any kind of cash flow to value this business. So you have to use other methods. Now, in terms of financials here, you can see how the FCF is negative, right? The trailing 12 months, negative 72 million. And they're going to be FCF negative for a foreseeable future, right? So this will heavily suppress the stock price for a while. This interim bullishness that you see is pure speculation. Nowhere in the world is the stock actually valued this much, okay? It's not actually valued this much. If you look at the earnings power, then the stock is valued at 38 bucks. And so that comes to your conclusion for Fubo. I hope you honestly found that useful. If you did find that useful, throw a fire emoji into the chat. I want to see how many people are actually listening. I wonder. Okay. Now I can answer some of your questions on the live stream. Let's see. Okay. Apple 150 calls for 3. By the way, also we should look at the dollar index here. Yeah, so you can see the dollar is starting to creep up as well. not yet at the level that I'm anticipating it to be, but if it creeps up to 91, you can assume that, you know, we're going to see some further outflows from all dollar-denominated assets, which will include equities, all right? Which will include equities. Okay, cool. Apple 153.5, yeah, dude. I mean, why not? Absolutely. I mean, I like Apple as a stock, but I'm going to tell you right now, though, that this stock is overvalued in terms of DCF valuation. I'm just going to put it out there. I don't own any Apple stock right now. It's a funny thing. I used to own it prior to the split, and now I don't anymore. I think that this stock is slightly overvalued, and so I don't hold Apple stock anymore. I hold undervalued companies, and I'm be looking to pivot my portfolio into a bunch of others. It's Coca-Cola is a really great buy right now, guys. I'm not sure if you guys are looking at this. If you're building a dividend portfolio, this is the time you add Coca-Cola. All right, this is the time you add Coca-Cola to your dividend portfolio, guys. Right, this is your, you know, that once in a while opportunity that you get to buy a great dividend cash cow, a company that will be around for years and years and years and will eventually come back to these levels. You know, this is a great company to add some shares right now. I guarantee you that you will not go wrong with adding these shares right now. All right. If you're somebody who's starting off the dividend portfolio and you haven't picked up Coca-Cola shares, this is your moment right now. All right, this is your moment. Okay. Let's see. Is Boeing still looking okay? Boeing, let's see. Boeing is at 195. It didn't beat earnings. Yeah, okay. There's a little bit of a gap here. Let's see what happens during the market open today, right? To be honest, I have a debit spread on Boeing. I'm not that worried. I'm really not that worried. And I have till June for this to improve. I have till June. Okay? You know where June is? Here, let me show you where June is. June is here. June. Whatever happens here, I don't know. I don't care. What I do know is that this stock is undervalued. That's all that matters to me. Okay? The short-term price action, whether it goes down or up or sideways, or whether people are buying it to the moon or people are not, I don't care about that stuff. What I do care about is the fact that this stock is undervalued right now based on the future cash flows. Okay? And it's the time to buy it. And so I'm taking debit spreads for the future, and I'm hoping that eventually we will get there. All right? Because I believe in my valuation. I believe in what I think this business is worth. And I know that this business eventually will be worth more. Okay? That's all. That's all about Boeing. And people are asking me more about Boeing now. Boeing's a good price to go long now, shake my head. Yes, absolutely. I totally agree. Now, obviously, this is dropping. And so, you know, wait for it to kind of find its bottom here. I think this might be the bottom, to be honest. We'll see. Let's see how the market trades today. But, you know, if the market's going to drop further, then Boeing's going to drop with it, right? We will see what happens. But as I've been telling you guys for a while now, that remember that rotation is going to happen. All right? Okay, look at this entire market here. Microsoft, the only thing up here. And this blew earnings out. So this is a muted earnings response. But I told you guys that consumer defensive and industrials will be two of the things that will, you know, next be rotated into. And expect that to happen sometime in the second week of February, right? After the sell-off happens, then we'll get rotations again, right? That's what usually is the market cycle. So make sure that you take advantage of this position to get cheaper stocks, okay? Boeing June 250 calls, sure, great. Those are great. Okay. GameStop is crazy. I made money on a put even though the stock was going up. That's pretty crazy. If you ask me, that's pretty crazy. Overpriced premiums, yes, exactly. IB Crush, yes, 100%. Exactly, that is exactly what I'm talking about. Got a covered call 219.7C against shares of AMC. Current max strike for March is $10. You own share? Do you own share? Oh yeah, so you do own shares. Wait. So you said got a covered call 7C against shares. Okay. The current max strike for March is $10. I mean, I think you should hold. Oh, those shares will get called away. Those shares will get called away if it goes higher, I guess. Okay. And then TD isn't allowing credit spreads on GME. Oh, that makes sense, man. Johnny, that makes so much sense. I mean, I wouldn't, if I was the broker, I wouldn't allow it too. Yeah, okay, that makes sense. So I guess you can't sell credit spreads on GME. That would, like, it's like free money basically, right? Imagine if you sold a credit spread on this thing. 382 now. Yeah, this is dumb. Like, this is the dumbest thing you'll ever see in your life. Like, this, I'm gonna tell you guys, once in a lifetime opportunity to see stupidity in play. This is what it is. I have shares in AMC about 288. Did you say you'd recommend holding these or take? I would hold AMC shares. So okay, listen, okay. AMC is not that bad of a degen play than GameStop is. Let me explain to you why. There's actually a real possibility for AMC to make it. Okay, so AMC is the one that owns a bunch of theaters, right? And you know, one thing is like this stock has a possibility to get acquired by a different company. Think about like a company like Amazon acquiring all their theaters and converting them into warehouses or fulfillment centers. You know, that would be something that's possible, you know. So like this is not a complete degen play, but then obviously the shares are now overvalued based on the current business activity. So yeah, okay, kind of a degen play because the shares are overvalued. But if you're already holding shares from, what is that price, 288, dude, you're good, man. Just keep holding them, you know. Like you're not losing any time value on those shares. So it doesn't matter. Okay. Let's see, biggest theater in the world. Yeah, exactly. See, so that's what I'm saying. Okay, consider TikTok comedy. Should I really do TikTok comedy? I feel like I should just do like a trader hating channel on TikTok. Like open up something to just make fun of those traders that post videos. Like I should just do like videos the whole day of me doing stuff like this. Like,
okay guys, I'm back with another trading video today. So here's a trading channel, and you buy calls and you sell puts, and you buy calls and you sell puts, and that's how you make money. Yay!
Maybe I should just put out videos like that the whole day. You know, just for fun. Yeah, forgot to draw a moon. Yeah, I guess. Hope everyone hedged. SQQQ calls about to pay. Nice. Yep, Landon, I hope that you hedged. SPY dropping nicely. Yep, we have been positioned for this for a while, guys. Boeing going for the gap close. T. Okay, I already spoke about this. So yes, we see probability based on current market movements. Excellent. Okay, profit on the shares is insane. Yeah, I would take those profits, to be honest, and then try and buy back those calls. See how much of a loss you're gonna make on them. I don't think it'd be that bad, honestly. Yes, with the voice over T. How annoying. Okay, 65 call. Okay, T. All right, market's gonna open in 1 minute. I have to be with my team right now. So I will catch you guys on Friday. Make sure you guys tune in on Friday for the recap Friday and choose a new stock for next week. Hope you guys have a great trading day. Guys, please don't go degen. Please trade responsibly. Please save your money for a better day. When this market drops, there are going to be a lot of things to buy, okay? And when that time comes, you're not going to have the money to do it if you do these degen plays. So please, stay out of the market if you can help it, all right? And I will see you guys on Friday. Peace out. I love all of you. No hate to anybody out there. I was making fun of... Wow, that was loud. I was making fun of specific people, but, you know, in reality, I'm telling you that there's no hate. It's all love. You know, everybody's going to do what they want to do, and that's what's important, all right? Do what you got to do, and that works for you, do it, all right? Cool. Have a great one, guys. See y'all. Talk to y'all later. Bye.